Hello and welcome back to Market Shares. I'm your host, Tony Blodgett, and today we're just going to take a little cruise around the interwebs, and we're going to talk a little bit about some of the top articles that I've come across here in the mortgage industry. I got about 4 or 5 I just want to touch on really quick and give you just kind of let you know what's going on in the mortgage industry, some things to keep an eye on, some interesting things, some things that might be a little bit optimistic about the future of mortgage lending. And look, not everyone has the time to dive in and read all of these articles and different stuff. So here's a quick summary of just a few of the highlights that are going on in the mortgage industry right now. We've talked a lot this year about credit reports, and they are so expensive, you guys. If you're in the mortgage industry, you're probably working at a company that's going through some sort of change in how they are charging for credit reports, because the price in 2026 has just skyrocketed. It's been all over the news. You've heard Pulte talk about it, and every company's scrambling to figure out the best structure between, ordering soft pulls and buy merges and tri merges and, bundled services and all the different combination of things that you might do to try to bring down your cost as a company and still be competitive and reasonable to your consumers. But one thing that is a big topic right now is the proposal to go to a single bureau system so that you don't need a tri-merge to be able to get a Fannie Freddie loan. Now, this is just a proposal right now. As you can imagine, there's definitely some pros and cons that we could see here. The main goal, obviously, driving down the cost, but there's a reason why we use a tri-merge today, right? Because all the data isn't available with all of the bureaus. And I don't really understand why that is. I think it's probably done intentionally to make sure that you need to have access to all the different bureaus, but just know that there is proposals to move to a single file, kind of a model. And the two sides of this are the people saying, yeah, but that's super risky, and that could make these mortgages not have as much integrity because not everything was taken into consideration. And then on the other side, you have, people saying, yeah, well, we need to find ways of driving down the cost of the credit reports. And, maybe it needs to be that, the bureaus need to do a better job of providing a full inclusive report as opposed to having to rely on this very expensive tri-merge type of a model in order to capture what is out there. So this is going to be one that's interesting to watch. One of the things they brought up is that, borrower costs for credit reports, they range drastically because, like I was mentioning, there's different packages you can negotiate with your credit vendor. And so you might see borrowers paying between $50 and as much as $120 or $150, for their credit report. Not to mention all the other, verification fees and stuff like that. That's all in addition to that. But what I thought was interesting is that the cost to mortgage companies on credit reports that, you can't charge your borrower for their credit report unless you require an application deposit from every borrower. You could use that to help cover this cost, but most mortgage companies don't do that. And so the total cost is roughly between $110 and $225 million in 23 and 24 for what we would call unreimbursed credit reports. I mean, that's a staggering number. And so definitely something needs to be done here, but keep an eye on that. It'll be interesting to follow. You might have seen this one. U.S. House votes to pass the Housing for 21st Century Act. Now, this one's a little bit confusing, but look, at the end of the day, and I'm not going to try to get into all the details, but really what the goal is here is something that I think has good intentions, and it'll be interesting to see. It's got a lot of support. It's a bipartisan bill, which we don't see very often. It passed the House and advanced in the House with a 50-1 vote in December on the Financial Services Committee. So that's pretty overwhelming, 50-1. So it's expected that this is going to move pretty quickly through Congress. And really the goal here is a lot of provisions that are going to loosen the regulations around building requirements. A lot of the, what are they called? The ecological, kind of surveys and stuff that are required. Some of this stuff is a lot of red tape that makes it expensive for developers to develop new lots, builders to build new homes. So they're really trying to streamline that process. And then one of the things that was in here that was very interesting is the ability for manufactured homes to be certified by HUD without being on a permanent chassis. And this is interesting because right now, a manufactured home by definition is on a steel chassis. And if they could pass some regulation that allowed what would be some of these manufactured homes that would be built in it'd be like a manufactured home built in a warehouse type of a structure that could be delivered onto the lot and didn't need to be on a metal frame. I think that opens up some possibilities for different manufacturers to get involved into that industry and have more, factory built homes that are then delivered to the site. All this is kind of geared towards finding more affordable solutions for housing, which I think is a good thing. There's a lot more in here about, kind of some of the code regulations for higher density housing in certain areas, and things like that. And, we've talked about that a lot up here in Washington State. There's been massive reform to the density, rules, and every municipality based on its size has had to come up with, higher density housing options, which has led to a lot of the detached ADUs. In many cities now, if they have a large backyard, you can build as many as 2 detached ADUs on those lots. You can then condoize those and sell those units individually. Some cities will allow 1 detached ADU. So we're just seeing a lot of this, and this is a federal program that's geared towards pushing these initiatives even further. Builders are supportive of it. It sounds like the manufactured home companies and other companies that want to maybe build manufactured homes but don't have the technology or the process that includes building them on to metal chassis are supportive of this. So keep an eye on this. I think this is going to potentially help free up some more affordable housing options. Love this article. Barry Habib and Logan Mohtashami, who I've referenced here on the podcast a couple times. He is the chief economist for Housing Wire. And Barry Habib, you all know who Barry Habib is. With MBS Highway, we've had his son Dan on here a number of times on market shares. And they were on a panel together at a Housing Wire conference and said that the housing market is set for a surge with all the pent-up demand. Now, we've talked about this for a long time, and I think the thing to recognize here is we're not quite ready for that surge yet. What they're referring to is when rates start getting under the 6 handle, when we start getting into the mid or even the low 5s, which we're not there yet, but if that were to happen, we've seen multiple indicators that there would be a surge in pent-up housing demand, people that have been waiting years, really, for interest rates to get back down into that realm. So this, to me, is just some real optimism about what could potentially happen if we see expectations exceed what is currently, kind of forecasted for 2026 rates, which is really to be in that 5.75% to 6.25% range throughout the year. But if we see anything dip below that, sounds to me like both Barry and Logan are both hot on the idea that we could see a pretty significant surge in pent-up housing. And hey, I would welcome that. So let's keep an eye out on those interest rates and what happens there. I talk a lot about refinances lately on this podcast, and Optimal Blue reported in their data that there was a 50% jump in refis in January with the dip in rates that we saw. You guys, 50% jump in refinance business, which is already up, by the way, from where it's been. So if you are still missing the refinance train, you are missing out on opportunity. And, these aren't all just your rate term refinances. Obviously, there's a lot of cash out options right now, but there's definitely rate term options. There's removing MI. Keep in mind, rates really jumped up in late 2022. So we have a couple years now of rates where, gosh, they were darn near knocking on the door of 8%, and some borrowers that might have had challenged credit or other factors, could have rates in the low eights. And could definitely be poised for rate term refinances. So when I see a headline like this, that just in January, 50% jump in refinance applications, look at your pipeline. Did you see a jump in your refinance business? And if not, look at what you're doing. We talk a lot about staying in touch with our database, looking for those opportunities. So just know this is what the headlines are. And I use this as a barometer to say, okay, where am I at with this? I'm definitely working with my teams to make sure that we're, not focused on refinances to the point where it takes away from our purchase focus. I mean, we are a purchase focus, organization as loan officers that are out building relationships, self-sourcing our business. Most of us are focused on purchases, but you can't miss the refinance opportunities when they're there. And if you're not looking for them, and you don't have the strategies to go after them, might be something you want to, tune into a little bit right now, because there's definitely been a jump. This one I thought was interesting. The last one I'm going to hit on, which is senior housing shortages grow as baby boomers, the leading edge of baby boomers, are now turning 80 years old. Literally my whole career of almost 30 years, we've been talking about the baby boomers and their impact on the housing market. What this article goes into is the challenges for aging baby boomers, and there isn't a lot of retirement housing or even assisted living options for people that are in need of that. That's what I want to talk about, is not what this article necessarily talks about. What this makes me think about is the massive need for more reverse mortgages in the world today. I think that most seniors, now some people are in a position where they have to go to assisted living, right? Maybe it's due to illness, maybe it's just due to lack of mobility. They really need to be in assisted living, and there's definitely less options out there, and they're more expensive and getting more expensive every single month as the demand grows for that. What that points to me is that, for many aging seniors, a reverse mortgage could be a great solution to be able to age in your home, get rid of that mortgage payment, even potentially bring in a monthly income, and you could afford to have nursing assistance in your home, in your own home, utilizing, money that you have set aside with the help of a reverse mortgage, and really live out your life the way that you want to, or even purchase a smaller home or a condo using a reverse for purchase to get you into, maybe you don't need the big home, but you could right size your housing situation, still use a reverse mortgage to do that, not have a mortgage payment, and free up some, monthly income that you could put towards your, needs, your assistance needs, if those exist, or at least prepare for that when the time comes. So this is a big thing, you guys. If you're, a traditional mortgage advisor and you're not thinking at all about how do you support reverse mortgages. I mean, many companies have a reverse mortgage division. You can refer those business over to them and get like a referral fee. Some companies will allow you to originate reverses on your own. I would come up with some method in which you're able to advise your clients if this is something that they need. I'm a huge fan of reverse mortgages. We've done multiple episodes on them. I think that there's a lot of myths around these products and programs, and for our aging seniors, it's definitely something that they should be considering. And when we now see that the rent and the costs for senior living are going up as dramatically as they are because of the high demand for that, to me, it just points towards looking at other alternatives. And I think a reverse mortgage is absolutely one of those to consider. So you guys, that's my run through the interwebs today. Just a couple things to keep an eye on. And, here at Market Shares, I want to make sure that I'm sharing with you, pun intended, what's going on around our industry. And if any of these things sound interesting to you, go ahead and research those on your own. And we'll probably do, one episode a month or every 2 months where we just get on here and we kind of go through the top articles that are happening around the industry, because not everyone has the time or desire, frankly, to jump on and read through a bunch of articles. But if we can summarize some of the top ones here for you on this podcast, and you can just listen to it while you're driving down the road, hopefully it brought you a little bit of information about what's happening in the industry today. If you like this content, then please subscribe to the channel, and we put out a new episode every single Friday at 10 a.m. Pacific time. And until then, take care.